Yes, you're certainly going to get sued, and there will be litigation between you and your insurance company, most likely.
And my insurance company will be suing me, or the other person's?
Well, the other person's going to sue you.
Or are they going to sue they're going to sue me, or they're going to sue my insurance carrier?
Well, they're probably going to sue you both.
Okay.
It's going to be a nasty trifecta of lawsuits.
Welcome back to the Talk Midland podcast. I'm your host, Logan Richetti with Modern Realty, and today I got my buddy, Jake Howard, Arbury Insurance extraordinaire, buddy, friend, pal, the kind of guy you call when you're on the side of the road and you need some help.
Investor,
past client. We've done a lot of things together. Most recently, we've just been really good friends, which I appreciate.
Me too.
Insurance in Midland. Let's talk about that today.
Okay.
Specifically, let's start with flood insurance in Midland, because as you know, half of the west side of Midland is a flood zone.
Yeah.
What are some things to think about with flood insurance?
Well, one, just brace yourself for how painful it's going to be to buy it. Flood insurance, I'm not a big fan of flood insurance. Now, and that's saying that after we've seen 2 historic floods over the last 6 years. Most people don't want to buy flood insurance. They're forced to by their lender. And flood insurance, 90% of it is purchased through what's called the National Flood Insurance Program, because no standard insurance carriers will take on that risk. As you can see, it's happened, twice here in the last 6 years, just catastrophic claims events. And I should caveat everything by saying the people whose homes were washed away, they're glad they bought flood insurance. They're glad they had it. The lenders are glad they forced it. But in Midland, the vast majority of people had flooded basements, which flood insurance doesn't really cover much. And so maybe we should just start with what is a flood? What is the definition of a flood? Because in Midland, people get water in their basements all the time. Is that a flood? No, it's not. 99% of the time, it's not considered a flood. There's a big, long legal definition for what a flood is, but the simplest way that I explain it to clients is if water is coming into your house through a window or a door, it's a flood. If it's coming in through a drain in your basement, not a flood. If it's coming in through your foundation walls, not a flood. It's got to be coming in through a window or a door, and it really needs to be coming in on a primary floor. If you have kind of like a half basement and water's coming in there, might not be considered a flood. It's got to be coming in at your primary level, above ground, through a door or window. That's a flood. And both of the flooding events here in Midland in 2017 and 2020, well over half the people who had water, that's not how water got into their house. It came up through their drains in their basement. So it gets very complicated, and all the different insurance companies handle things different ways. But if water is coming into your house through a window or a door, the only way you can get coverage for anything is through a flood policy. So that's why if you live in a flood zone, your lender is typically going to require that you buy a flood, because your standard homeowner's policy isn't going to cover anything. So there's a lot of factors when you're buying flood. One of the most important to understand is that anything in your basement, for the most part, is not going to be covered. In Midland, I've seen it a million times. People have these gorgeous finished basements with carpet, drywall, furniture, TVs, basement floods. There's no coverage for that on a flood policy. Now, if you're lucky, on your homeowner's policy, if you have a coverage called water backup coverage, you might be able to get coverage there. But the caveat for that is that doesn't pay out in a flood.
Jeez.
So
what a scam.
So, I mean, I don't want to get people too depressed and make insurance people hated more than they already are. But that's just the reality of the situation. And when you're talking about the west side of Midland, in the city there, my advice to people is don't invest anything in your basement that you're not willing to lose and not have covered.
Let's go back to the flood backup, or the backup policy, for a minute. I put those riders on all my rentals. You've done that for me over the years.
Yep.
and I have paid it. I have asked for a claim before. I've had a claim before once with a city water backup. What is it?
Water backup.
And that's a very valuable policy to have because it can pay out 10, 15, 25,000.
Yep.
And I think one thing that people don't understand when they buy insurance, flood insurance or otherwise, is they always go and they just look for the cheapest cost and they get a quote from their carrier and one quote's $1,100, one quote's $1,300. So they go with the $1,100 quote. And what they don't realize is that your quote is built based on what you include in your policy, right?
Correct.
So you really need to sit down with your insurance person and lay out your plan for what kind of policy elements you want included, right?
You're spot on. And in Midland in particular, water backup is, I would say, probably 5-1, the most common homeowner's claim that we have.
Yes.
And so you need to tell your agent, if he's not proactively asking you, you need to tell him if you have a finished basement, what's in your basement. Because if you're going to have a claim, there's the overwhelming probabilities are it's going to be water in your basement. So if you have now what's good about water backup, it might not be paid in a true flooding event, but most times that's not when people get water in their basements. Most commonly we see it in an event like what we just had with this snowstorm. Mm-hmm. People lose power, water's still flowing into your sump pump, and you don't have any type of battery backup. Your basement floods.
Yes.
10 hours go by and you got a flooded basement.
Of course, it's not a flood, right? They don't call it a flood.
Right.
They call it a backup.
Right. Yes. We need to be careful about using the F word.
So I got an F word for this conversation. So for a couple of $100 a year onto your policy, you can add a rider. Is that what it's called? A rider?
Yeah.
And you can define how much coverage you want. You can go up to what, $50,000 or something?
Yeah. Every company caps you at a different amount. Most will let you go to at least 25. Some start tightening it around 50. There used to be a couple that, you could go as high as you want, but now for the most part, the most you can get to 100K.
Out of 10 homeowners listening right now, how many homeowners have backup coverage, you think?
Well, within our agency, close to 100%.
Because you make sure they do?
We just automatically put it on.
You just chunk it in there when you quote it?
Yeah. Yep.
So
it's just, to
looking
leave
out.
that out is just
Crazy.
foolish. Yeah.
What else is foolish to leave out of a policy?
Well, one thing that a lot of people don't buy, I'd say probably 40 or 50% of our clients buy, is a personal umbrella policy, liability umbrella. What that does, it gives you liability coverage over pretty much everything that you do. So if you're driving a vehicle and run a red light, your liability umbrella can kick in there. Someone slips and falls at your house, your liability umbrella can kick in there. You're out riding a jet ski or cruising a boat and cause someone damage or hurt somebody, your liability umbrella will kick in there. Even more so, people who serve on boards. This is a good one that I like to talk about. In Midland, we have a lot of nonprofit participation. If you serve on a board somewhere, you can be sued personally for mismanagement of whatever. Liability umbrella covers you there. And most people can buy an umbrella. You get all this coverage that goes over everything, $200 a year. So that's one that I'd strongly recommend.
I have that.
Yes, you do.
What happens if your 16-year-old daughter hops in your car, runs a red light because she's texting her buddies, and she smashes into somebody and hurts them?
Okay, asking all the tough ones.
Yeah.
Well, hopefully she's listed on the policy, first off.
Interesting.
So a lot of people try and play games with that because teenage drivers are brutally expensive to add to your policy. And, whether people say they forgot to add them or it's an unscrupulous agent just trying to keep them off the policy to keep the premiums down.
Or you didn't know.
Or maybe you just legitimately forgot.
Yeah. Because they don't own a car yet, right? They're just driving your car.
That's correct.
So a lot of people don't even think to add their child to their policy because they don't know they need to.
That's exactly right. The day they get their driver's license, they need to be added to that policy. And we get asked that question a lot too. Do they need it when they have their learner's permit? Most of my carriers have said no, they don't. We will add them to the policy. They need to be added the day they get their actual license.
All right, so let's say I forget to do that. My 16-year-old kiddo hops in the car, runs a red light 'cause she's texting on her phone. Boom, we got a problem. Now I get sued?
Yeah.
And my personal assets and my businesses and all those things are in jeopardy?
Well, you might have to talk to a lawyer about your business assets and how that's all set up. There's a lot of variables there. But yes, you're certainly going to get sued, and there will be litigation between you and your insurance company, most likely.
And my insurance company will be suing me, or the other person's?
Well, the other person's going to sue you.
Or are they going to sue they're going to sue me, or they're going to sue my insurance carrier?
Well, they're probably going to sue you both.
Okay.
It's going to be a nasty trifecta of lawsuits. So, the injured party is going to sue you, and they're going to name the insurance company because they got the money. The insurance company is probably going to say, you didn't tell us about this driver. We want to get off the claim. So then you're going to have to hire an attorney to try and sue the insurance company to get coverage. It'd just be a horrible situation.
And you're saying that the umbrella policy would override that would protect me in the event that I did forget?
Well, another great question, Logan.
Another F word coming here.
The umbrella, you should have all listed drivers underneath the umbrella. That's part of the umbrella application.
Jeez.
Yeah. So if you forget to add them to the auto and forget to add them to the umbrella, it's not a good situation. Now, that's not to say you might somehow get coverage, but they absolutely have grounds. The insurance company absolutely has grounds to deny coverage. It's not a risk I'd be willing to take.
Let me ask you a strategy question and try to be open and honest with us here. You are an insurance broker.
Yep.
Do you have a fiduciary duty to me as the client or to the provider of the insurance? Who is your fiduciary duty?
Well, I should. The first thing I should say,
it's getting hot in here,
is our E&O carrier probably would not want me to come on this podcast, and everything I say is not legal advice.
All right, too bad.
And again, getting real specific, fiduciary, that's like a very strong definition. I do not believe that we're held to a fiduciary duty, but we certainly can take liability for our actions, whether not recommending a coverage to you, not doing a good enough job in our follow-up with you, asking questions about a basement or a teenage driver, not having you sign an application. So we definitely can take liability for our mistakes.
Let me ask it a different way. When an insurance claim comes in, what are the dynamics for the insurance broker like you? In other words, if that insurance claim gets paid out, there's a negative financial repercussion to the agent. True? Or how does that work?
There can be. So in a good year where we don't have any floods or any hailstorms or anything, essentially insurance agencies can be bonused, if it's a low claims year.
Okay.
It's basically like profit sharing. I mean, that's what they say.
So it's an aggregate based thing, right?
Yes. Yep.
Okay, because every time I've had a claim, you've come out and you've helped me to understand, what I'm entitled to, and you fought on my behalf.
Absolutely.
But you're doing that because you're giving me good customer service and because you want me to refer to your friends and family.
100%.
Even though a claim that gets paid out into my account goes against your financial incentives over the course of a year.
Yeah, that's fairly stated. It's our job. I mean, this is what we're in the business for, is to help people on some of their crappiest days. I mean, I literally just had a client come into the office this morning who's unfortunately their spouse passed, and it's, a horrible event to deal with. But, in the back of both of our minds, I'm sure we're saying, thank God that you took the foresight to buy some coverage.
Some life insurance.
Yeah.
Let's talk about life insurance.
Sure, let's transition to life insurance.
All right, I'm getting older.
All right.
I drink a lot of caffeine.
All right.
I got a lot of stress, and I could just go any day. If
Jeez, oh Pete.
It's true.
Oh.
I know it's not funny, it's morbid, but it's true. Once you get to a certain age, or even before that, there is a constant risk of death, and the bigger your family gets, the more people depend on you, the more important it is to create an estate plan and a will and a trust and life insurance as part of that.
Yeah.
You have helped me buy millions of dollars of life insurance. I have a really big corporate policy that protects one of my businesses, and then I have some individual term and whole life policies, neither of which I have any clue what they are or how they work. So that's part of why I asked you to join here today. Help us from a layman's term, from a very basic standpoint. Help us to understand the different types of life insurance, how they work, and why we all need them and how to buy them, but make it real basic.
Okay. So 90% of people buy life insurance for one reason: income replacement. So whether it's a dual spouse, a dual income earning household, or single, if someone who's earning income for the family dies, you have to replace that. That's really the number one objective for most people when they're buying life insurance. Because not only is it emotionally devastating and traumatic, it's financially devastating and traumatic.
So if the breadwinner dies unexpectedly, the spouse gets a big lump sum payoff, and that helps to offset the loss of future income that would have been earned by that breadwinner because they're not around.
That's exactly right. And life insurance death benefits are always paid 100% tax-free. So that's nice. And the main question we always get asked, and Colleen, I work with Colleen in the office. She handles a lot of our life insurance now. Number one question is, how much life insurance do I need?
Right.
And there is no exact answer. It's a totally subjective question. What I say, on average, is most people buy between 5 and 10 times their earnings.
Interesting.
So if you make $100K, the average buyer is going to buy between $500,000 and $1 million.
And the idea there is to cover the spouse for 5 to 10 years so they can get back on their feet and not have to worry about money for a while, but eventually it runs out. But that's enough time to get them through.
That's exactly right. You're buying time to, readjust your lifestyle.
And the reason that people don't buy 20 or 30 or 40 times their income is because it's just more expensive than they need, or it's just a risk they don't want to take.
Yeah, it's just not necessary for most people. You're certainly not trying to financially profit from the death of your spouse or anyone. But yeah, it's just not cost effective. If you have that extra money that you want to put into life insurance, what I would say is most people buy term life insurance.
Let's define that.
So term is, as the word would imply, you buy it for a set term, 10, 20, 30 years. Okay. Your premiums are guaranteed, locked in for whatever that period is.
Your premiums are your payments that you make every month.
Yep. So, but all you're getting, the only way that policy will ever pay is if you die. It's an all or nothing deal. You're buying to protect against unexpected death, and that's it. There's no other features of the policy. And at the end of the designated term, essentially the policy's over. You can convert them into something else, which is nice, but the premium's a lot more. If you were paying $50 a month to convert at the end of 20 years, you might be talking $500 a month.
So basically you're betting on your own death. And if you win, you get paid. If you lose, you're still alive.
Yeah, that's one way to say it.
All right, or maybe you could say the other way around. If you lose, you die. If you win, you're still alive.
Yeah, either way, it's a hedge against unexpected death.
It's a hedge against unexpected death. The premium payments, the monthly payments, are typically pretty low. I guess they get higher as you get older or more sick.
Yeah.
But a lot of people listening might think $50 is not a lot, and some people will think that's a lot.
Yeah.
So for the people that think $50 a month is a lot to invest in a hedge against your own death, sell them on why they should do it.
Well, what's the cost of an unexpected death if you have no insurance? I mean, it's brutal. And what I would say is too, buy what you can afford. Everyone probably wants 10 or 15x their income in terms of a death benefit. But if you can only afford 5 or 2, that's better than nothing.
Yeah.
Just buy what you can afford. And unless you have serious health problems, most people can buy term insurance even into their 40s for $25 a month or less.
Really?
50 was just the number I was throwing out.
Yeah.
So life insurance for most people is very affordable.
And really, it's a gift. It's a gift to your spouse to say, hey, spouse, I love you. If something happens to me, you're taken care of.
Yeah.
You should package that for Valentine's Day.
So it's funny you mentioned that. A mentor early in my career, Mark Prohaska, Mark might see this on Facebook, but he used to say, and it was so cheesy, but it's true. He said, how do you spell life insurance?
LOVE.
So, but it is true.
Yeah.
It's a selfless thing. You're never going to see a dime of that money.
Right. And you can't write it off, right? It's not a depreciable expense or a deductible expense.
Nope.
So that's the downside of it. But I really suggest everybody listening to really seriously consider getting some life insurance for your family, for your kids, for your loved ones, for your heirs. It's not that hard to do, and it's not that expensive. And it's for a couple cups of coffee per month, you could really make a difference if, God forbid, something happens to you.
Absolutely. And another thing I should add is back in the day, even just 10 years ago, everyone, for the most part, had to go in and get a physical. You had to get your blood drawn, urine sample, the whole doodah. Now, for $1 million or less, most people A lot of people can get approved for life insurance, no physical.
Wow.
They just run a medical background check, and 24 hours, we know if you're approved or not.
And you can set up automatic ACH payments, or you can take one lump sum per year. It's easy to pay.
Yep.
And I always wondered, I think you've mentioned this to me before, but if I died tomorrow, how would my heirs know, and how would the insurance companies know that I was dead?
Excellent question. So at the end of every month, all licensed insurance companies in the United States run this Social Security death sweep. So even if you don't tell them, if your family members didn't know you had a policy, the insurance company will find out, and they have a legal obligation to contact you and get you your money. So that's a great question. I've seen it before. There are surviving spouses that did not know their husband had a policy. And a lot of times it might be a policy that their parents took out for them when they were 5 years old.
Yes.
And that you just kind of forget about and lose track along the way. But there is, at the end of every month, a Social Security number sweep on all death certificates that have been filed. So the money will get to you some way or another.
And another thing that I think a lot of people don't know about is when you have $1 million policy, you can distribute the benefits to as many people as you want in as many ratios as you want.
Correct.
So, I recently redid my insurance policies and added to them and changed them around. And, I put my brother, I think, and my sister on there a little bit, just in case. I wanted some people to get some packages if I died early, have a little $100,000 coming in the mail, just to say I love you.
Yeah.
So you can do fun things with your insurance policies, right?
You can make your church or nonprofit a beneficiary. Yep. There's a lot of different uses. If you set up a trust, you can have that as a contingent beneficiary. That's important if your kids are under 18 years old.
I just set up a trust. I remember you were dealing with my trust attorney because there were some considerations that need to be made between the two of you. What were those?
So the first is, normally you don't want your trust to be the beneficiary of life insurance.
Oh. I didn't think you'd say that.
Yeah, because the money will transfer faster and simpler directly to your spouse. If you just make them a beneficiary. Life insurance passes by what's called contract law. And so...
Interesting.
Yeah, so husband and wife, what I always recommend is you make each other primary beneficiaries. Then if you have minor kids, make your trust the contingent beneficiary.
The trust.
So if you and Morgan are on, heading to the Bahamas and the plane goes down, who's going to manage the money for the kids? Well, if you don't designate it, it can be managed by a probate court until they're 18. Which is okay, but there's costs associated with it, and
not a lot of control.
Yeah, not a lot of control. So you put your trust as the contingent beneficiary, and then with the terms of your trust will dictate how the money's invested, how it's to be distributed. Much better way to do that. But normally you make your spouse the primary beneficiary, and everyone else contingents.
Do you have a trust?
Yes, I do.
And who's in charge of that trust if you die?
My brother-in-law.
Interesting.
Yeah, so you want to designate
somebody,
the trustee.
So I designated my attorney.
Okay.
Is that a common thing to do?
Yeah.
They do that for a fee.
Yep.
And the reason that I chose my attorney, I trust her and I think she's fantastic and very, very sharp, and I think she would do a great job. But the other reason was I didn't want to burden anybody else in my family with that job.
Yeah.
I have a lot of real estate, a lot of businesses, a lot of entities, a lot of bank accounts. Yeah.
Yeah.
And I've watched my mom and my dad do that for their parents. And it's an act of love that you do, but it's a huge service. And as a real estate professional, I have helped people sell their real estate, or helped trustees sell real estate on behalf of these trusts and things. It's a nightmare.
Yeah, it's
very burdensome. So I didn't want to place that burden on anybody that I loved.
I applaud you. You're 100% right on that. The only reason we did it that way is because that's who is going to be the designated guardian of our kids.
Oh.
And so I wanted him to have, him and her to have access to the money.
Interesting.
And I think there's even a designation in the trust. They can pay themselves for the time. And they should, because I own a lot of stuff too. It is going to suck up their time. And if you're having to take time off work or whatever, you deserve to be compensated a little bit. So there's enough life insurance in there. There's going to be enough cash. Yeah, take a little for yourself.
a little wet your beak a little bit.
Yeah, but all great considerations. It's a heavy burden. God forbid it ever happens. That's a huge responsibility.
All right. So most people don't have a will. They don't have a trust. Everybody needs to get a will. Most people should get a trust if they have a certain level of assets, or at what point does a trust make sense? I know that's outside of your.
Yeah, you're getting into lawyer speak here, but my thought was there's more than it doesn't come down just to what you own for reasons to get a trust. There's a lot of like mental capacity type issues that are important with a trust. But I would say the more LLCs and businesses and partnerships that you have, the trust just makes things a lot easier, easier to organize.
All right. We talked about term policies. Let's talk about whole life policies.
All right.
Now you're getting excited.
So, term we said last 10, 15, 20 years, however long. Permanent policy or a whole life policy or a universal life, those are all under the permanent umbrella. They last, in theory, forever. As long as you pay premiums on it, the policy should last, whether you may live it to age 55 or 95.
Why do you say should?
Well, because
I don't like that.
Again,
It's another F word.
There's certain policies out there. If you don't pay the premium,
It goes away.
it goes away.
You miss one payment, it's over.
It all depends. So like I don't want to get into the weeds on this, but like in the 1980s when interest rates were really high, like 13, 14%, all these permanent life insurance policies were based off making 13 or 14% interest for the life of the policy. Well, over the next 25 years, interest rates just came down, 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 and the policies were low on cash, even if you were paying your planned premium.
Jeez.
And they'd run out after you paid into the policy for 20, 30 years. It would lapse unless you like quadrupled your premium.
Wow.
So that put a bad taste in a lot of people's mouth. So that's why I say that. Now, new policies are not designed that way.
They're insured by the government or something?
No, they're just the insurance companies won't even design the product with that as a possibility. And I shouldn't say that because there's still some weird little things that can happen, but you should, if you're thinking about buying one, and let's talk about the main reasons why you'd buy a permanent policy. One, you want to know there's death benefit there when you die. Guaranteed. And two, there's a lot of tax preferred treatment to cash value in life insurance. So you actually build up a tax deferred and potentially tax free sum of cash that you can have access to at any point in your life.
And that's based on a percentage of each premium that you pay in?
Yeah, essentially. So if you pay in $100 a month on a permanent policy, maybe 80 of that gets carved out and goes into this cash pool where you have all these tax advantages, and it can be invested in a million different ways. You can put it in the stock market. In a whole life, it's just you're basically paid dividends and profits from the insurance company. There's a lot of different ways you can invest it, but the bottom line, it will grow. It will grow tax deferred, and if withdrawn correctly, it should be tax free. So how I've said this before, it's kind of like, a Roth IRA. Everyone likes Roth IRA. You use after-tax money, and then you never have to pay tax in the future. It can function similar to that, and it's nice because there's no income limitations. So with a Roth IRA, once you make a certain amount of money, you can no longer contribute to a Roth IRA. With cash value life insurance, there's no contribution limits, there's no age limits, there's no income limits, and that's why you see a lot of executive professional athletes. Jim Harbaugh, he got a policy from U of M. It's like $1 million a year premium. It's a great tool for them because it's one of the only tax advantage investments available for high income earners.
And for that reason, the payouts are smaller and the premiums are higher because of that.
Yes, in general.
So Jim Harbaugh chucks $1 million into his whole life policy. Now, is he minimizing his taxable income by $1 million, or what is the benefit to him?
Excellent question. No, he's not. There's no current present day tax advantage.
It's down the road?
It's down the road. So he's paying full tax on the money that's being contributed into that policy for him. But in theory, if everything goes well with the policy, it'll grow tax deferred, and he'll be able to pull out the money tax free.
So 20 years from now, when it's doubled or tripled, he doesn't have to pay tax on the gain then?
Yes, that's the plan.
And if he dies, then he gets the payout from the policy.
Correct.
Wow.
And you'll see that with a lot of employers. Like, I have no idea what the actual agreement is with Jim Harbaugh, but I wouldn't be surprised if U of M has themselves as, half beneficiary on the policy as kind of a hedge. If he dies, it's horrible for them too.
Yes.
So you see that a lot with corporations. There's these policies called bank-owned life insurance and corporate-owned life insurance where the beneficiary is, half the company, half the employee.
So they look at it as almost like a long-term investment.
Yeah.
So basically they take some of the compensation package, they chuck it into insurance. They tell the guy, hey, look, if you die, you're covered. In the meantime, you can grow this tax-free. Oh, by the way, some of the benefit when you do die comes back to us.
Correct.
And that's going to pay a return. I mean,
Right.
That's going to be more than they put in, right? Or maybe not.
All depends how you set it up.
But either way, they're getting a rebate on their compensation plan.
Yes.
And they sell that to to Harbaugh by saying, hey, look, you're going to be able to, if you die, you're covered, your family's covered.
Yep.
And if you don't die, or until you die, you're going to be able to compound these earnings tax-free in the future.
That's exactly right.
What's the downside to a whole life policy?
Well, it costs more. I mean, that's
expensive.
That's the obvious one.
And you can't really retrieve your principal, your investment, right? You can't get that back.
You can, but for probably the first 7 or 8 years, there's not much in there. But normally, most policies, once you're 10 years in, you can take all the money back. And the nice thing is there's no age requirements where with a 401k, you have to wait till age 59 and a half. Same with an IRA. Life insurance, if there's cash value in there, you can pull it out pretty much anytime.
All right, so you got a teacher, Midland Public Schools, makes 50, 60 grand a year. Should that person buy a whole life policy or a term policy?
I would start with a term policy for sure.
Just to cover the family.
Yeah, the income replacement is by far the most important thing for most people. The whole life, the permanent products, that's really if you have extra income and you're looking for some type of tax diversification.
So you look at it much more like an investment than an insurance policy.
Yeah, and I have to be careful because I'm not an investment advisor. I can't give investment advice, but I can certainly talk about life insurance and how permanent cash values work.
What do you love most about Midland?
I would say the people. I mean, it's a great Midwestern town where people take care of each other. There's a real sense of community connection. I mean, I can't go anywhere without seeing someone I know and saying hi. And there's just a general Midwestern friendliness that I like. A lot of people don't like that. I don't understand what could possibly put you off about Midwestern friendliness. But there's some, apparently some people like going into the big city and, getting mean mugged and looked. I mean, I love how nice it is. And it's just a great town.
When are you running for public office?
Never. I'm not jumping into that horse bath again.
All right. As far as insurance goes, home, auto, life, umbrella,
Yeah, umbrella.
flood.
We talked pretty much about everything.
That's about it.
Yeah.
So just reach out to Arbury, reach out to the team there,
Yeah.
And,
We'd love to help you.
make it happen.
Yeah. Got a lot of great agencies in town. You don't have to come to us, but we'd certainly love to help you out.
Well, I think you should. I've been there for 10 years. I appreciate everything.
Well, thank you, Logan.
All right. Thanks for
appreciate
being
you.
on the Talk Midland podcast.
All right. Thanks for having me.
Bye.
See ya.